Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. Got a very special guest here. This is a long overdue interview. I've been following Brien Lundin's work for many years. He has one of his efforts is the New Orleans Investment Conference, which is one of the top investment conferences in the world. That he does annually, and then he also has his gold newsletter that he's been putting out since 1993. Very well known in the mining sector, puts out a lot of great work, and I often watch any interview you're involved with, Brien, and I'm glad to have you on the show finally. It's a long overdue.
Well, great to be with you, Allan. Long overdue for sure, and I'm really looking forward to talking. And just a mild correction, that gold newsletter started in 1971 by a guy named Jim Blanchard. So I started working for him in '85, but and took over publication in the late '90s, around 2000, after he passed away. But the newsletter is actually, as far as I can see, the oldest continuously published investment newsletter in the world today. So we're kind of proud of that fact. We are as old as the modern gold market is.
And how long has the New Orleans Investment Conference been running for?
Well, since 1974, Jim Blanchard started Gold Newsletter basically the day that he heard Nixon close the gold window, which was August 15th, 1971, and he just decided to advocate for the return of the right of gold ownership for American citizens, because it was illegal for them to even own gold back then. He started Gold Newsletter as his primary tool to do that. And of course, he was successful, along with some other people, in getting that done by 1974. And he decided to have a conference to teach people how to invest in gold. And that started what became, over the years, became known as the New Orleans Investment Conference.
You know, you bring up an interesting point there to me, because I've been making this point in shows over the last few years, is that economics have a way of fixing stupid. And it probably wasn't a smart move to go off the gold standard, because as we can see, look at all the debt and out of control politicians spending money like it's going out of style. And the bigger point that I've been making is that I think that there has to be somewhat of a return to some form of a gold standard. Yeah. How that will take shape, I think we're starting to see some signs of it in the BRICS nations. You know, since the 2008 economic crisis, all those central bankers have been buying gold. So they're kind of going towards some kind of a gold standard. And I really believe investors should be doing the same thing.
Yeah, they absolutely need to. I agree with you. I think that, and this is one of the things I talk about all the time ad nauseum, is that we are in the end game of a trend that started at least 40 some odd years ago, and perhaps 60 years ago, going back to the guns and butter deficit spending, the beginning of deficit spending in the US in the 1960s. But that had gotten so out of control that by 1971, Nixon closed the gold window and severed any convertibility between the dollar and gold. I don't think he had a choice at the time, frankly. So I'm not that anti-Nixon as some people. Because the real problem was this deficit spending. And ever since then, ever since Volcker killed off inflation by hiking interest rates to over 20%, rates have been on an ever descending staircase downward. Just every time there's any recession or hiccup in the economy, they lower rates, and they never are able to raise them back up again. So, you know, that culminated post 2008 with zeroed interest rates, and they did a bunch of other stuff. Post COVID, all the stuff that they did over 4 to 5 years after 2008, they did it post COVID in 4 to 5 days. So they have to come out with ever greater shock and awe at this point after every episode that, of course, they create. And the next one is going to be much worse or much more extensive than, and has to be really much more shocking to the markets than what they did post-COVID. So that is coming, and we know it's coming. And that's why you need to own gold. That's why you need to own.
You know, I made a point recently, Brien, that it's not complex economics, it's simple math. You know, when you go from zero or virtually zero or negative, if you factor in inflation, for 14 years or so, and then you rapidly ratchet them up, where you've built everything, the economy, the real estate market, the commercial real estate market on zero interest rates, you're going to cause a problem. And that problem, you know, the difference between then and now, the Volcker era and now, is we've now got the government at 125 or more percent of GDP. You know, then you put on the consumer debt and the corporate debt, and you're looking at 300-400% of GDP. This is not sustainable. This is what I call a death spiral in debt.
I don't even know why you have me on, Allan, because we are singing side by side in the choir on this one. I totally agree. You know, Powell wants to be Volcker. He idolizes Volcker. He wants to be known as the next Volcker, but he just doesn't have Volcker's toolbox. We're paying about $1 trillion a year now, just in interest on the federal debt. You know, going nowhere. And where do they get that money? Well, they have to borrow more money to increase the federal debt.
But now borrowing it at 5%.
Exactly. And it's going to get up to closer to $1.5 trillion as things reset to these rates. And you mentioned corporate debt. You know, there are so many zombie companies out there that were barely covering their interest payments at debt that was set at a zero interest rate world, and that debt is going to reset over the months coming up. There's a tsunami of higher debt service costs coming that's about to hit the shores of the U.S. and really the global economy, and it is going to be like an axe to the head of these zombie companies out there. They are going to fall one after another, and we just saw that bankruptcies in August soared to one of the highest levels ever, if not the highest, for an August period. And the line just goes straight up. So it's starting to hit right now. And the Fed wants a recession, but like Mencken said, be careful what you ask for, because they're going to get something that they may not be able to control.
And it looks to me like that commercial real estate issue is going to be the big problem, because you got a lot of, I was in that business for a while, and you know, those commercial real estate, they're running at 20-30% vacancies at post the COVID crisis. And they built all their debt to pay for to buy those properties on near zero, and now they've got I think, I can't remember the statistic, but it's rapidly coming that they have to like 30% have to do it this year and 30% next year, and that's just going to kill the commercial real estate market and could be part of the house of cards falling down.
Yeah, and you know, getting back to what you originally said, you don't go from the easiest monetary policy in human history, which it was, 5,000-year lows in interest rates. Don't go from that and build an economy, really a global economy, on a foundation of zero to negative interest rates. And then with the flick of a figurative switch, go to one of the harshest monetary tightening cycles ever seen, without breaking not just something, probably breaking a few things. So we don't know whether it's going to be, you know, a new housing crisis. We don't know whether it's going to be the recession that seems apparent is oncoming. We don't know if it's going to be a reignition of the banking crisis, or something else, or the debt service payments, or something we can't, most likely something we're not even thinking of. But something's going to happen, and you damn well better own gold going into it.
I think it's going to be a combination of the commercial real estate problems and a resumption of the banking crisis. If you look at the bottom line of a lot of these banks, they're insolvent, and you can take that right up to the biggest ones. If they had to mark to market or mark to trade their portfolios relative to their liabilities, they're insolvent. And the Federal Reserve itself is carrying a lot of that troublesome paper.
Yeah, if they had, and of course they're going to change the rules, as we know. They already changed. Banks don't have to mark to market their loan exposure. They were within. Remember now, they were within a hair's breadth of both Powell and Yellen saying that every bank deposit in the U.S. would be covered. And they were kind of talking around the issue, and obviously weren't talking to each other and didn't have a united front, but they were within a hair's breadth of saying that, bailing literally everybody out.
That's 13 to 15 trillion dollars of bailouts.
Yeah. But once you start tossing around trillions, it's just another number. I posted a tweet when this first bailout exceeded $1 trillion that it's like drinking tequila. The first trillion goes down hard, but after that, it's just easy.
Well, speaking of tequila, I live in Mexico, and I learned that if you buy expensive tequila, it doesn't go down. That first one doesn't go down as hard as some of that tequila.
Yeah, that's one of the lessons I've learned over the years as well, but I paid tuition for that lesson. Pretty steep tuition.
They can change the rules, Brien, and they can say that you don't have to market your assets. But the bigger problem is when they have to mark to trade those assets, like they did with these regional banks that had these runs that can happen at lightning speed nowadays. They didn't have to worry about mark to marketing. They had to go out and trade those assets and cause some real problems.
Yeah, and that is an issue with some of those banks. And when you look at some of the banks, you look at First Republic and the like, sure, they didn't hedge the duration risk as well as they should have or could have. But I don't think many other banks did out there. So their business practices weren't that, outlying as much as people think from what just about every bank out there was. In Silicon Valley Bank seemed to do everything right. They were a high touch, had high quality depositors, really took care of them, everything else. But that was a classic bank run fueled by Twitter and text messages that just exploded overnight. And that was a crisis of confidence. And it's not going to take much to spark that again in the US banking system. And pretty soon all of the deposits are going to go to the big banks that are too big to fail. And then you and I and everybody else are going to have to shoulder that risk of those banks. And the whole banking system is going to be completely it's being transformed as we speak today.
Yeah. Well, I think another point I've made a lot is that I think that investors out there can protect against these various issues we talked about by owning gold, and if for protection, and if they want growth, they can look at the gold stocks and the other metal stocks. And those are trading, the stocks are trading at just incredibly low valuations. I started in the business in 1993 of mining as a consultant, and I remember the late 2000s and early 2001. And I saw the exact same thing, Brien. A relatively strong US dollar, sentiment towards gold sort of soft, and the sentiment towards the gold stocks and the other metal stocks was horrible. And, the song is being sung again right now.
Yeah, it really is. You know, I had some people ask me, have I ever seen a gold, a mining stock market as bombed out as this one? And I say, yeah, you know, 1999 to 2000 was as bombed out. But the difference is back then, gold was selling for $252 an ounce. So we needed back then a couple of years of sustained metals price uptrend to get the mining stocks reignited. Now we're within 6% of an all-time high on gold. So instead of needing a couple of years of an uptrend to get things going, we need a couple of weeks.
Or
You know,
months.
that's all we need.
Yeah.
Because the price levels are there. The market doesn't care, though, where the price of gold and silver are. It cares where they're headed. And if it's convinced that they are headed upward on a consistent basis, it's going to just light the market afire very quickly.
And one of the big factors in the price of gold movement, some will argue with me, but I think it's pretty clear, is the strength in the US dollar. When that is the most watched price. The strength in almost all currencies worldwide, gold is doing very good. And in fact, it's doing very good against the US dollar. But all of those things we talked about, the Fed on this relentless campaign of raising interest rates, despite the debt problems, the commercial real estate problems, the consumer now paying, you know, living paycheck to paycheck and using their credit card at over 20% interest rates. These things are all going to, when the Fed changes path, is going to be bearish for the US dollar. And that's when I think we'll see a strong move in the price of gold and the gold stocks. And that,
yeah, you know, and that may be an area where we differ a little bit. I don't think it's the dollar index that drives gold as much as the dollar index is driven by yields, by US Treasury yields. And so it's like there's a positive, very close positive relationship between yields and the dollar. When the yields are rising, so is the dollar, and an very close inverse relationship between yields and gold. And when yields are rising, gold is going down. Of course, there are exceptions. If inflation is exceeding the rate of yields, the interest rate, then gold can be positive, etc. But it is exactly Fed policy. Fed policy is leading the world. Central bank policy has been driving all markets to a very great extent since the 2008 crisis, a bit before that, but that's when it really kicked in. And the Fed is the leader among all the central banks. So the Fed started to tighten before the other central banks and has tightened more aggressively. And that's why the dollar has strengthened, and that's why the other currencies have weakened in relationship to the dollar. The same thing's going to happen on the downside, just as you pointed out. When the Fed is going to be the first to pivot and to start cutting rates, and therefore the dollar is going to fall, and we're going to have everything working in gold's favor at that point. The question right now to me is two questions. What is going to be that precipitating factor, and when is it going to happen? But the inevitability of it is something I think the markets are either pricing in or beginning to price in as we're talking, or are just impatient to start pricing in. So as soon as there's a sign, and I think the sign has already come, that this rate hiking cycle has peaked. Yeah. As soon as there's a sign that it's potentially going to go to the downside of that cycle, then Katie barred the door. All the speculators, everybody's going to be shorting the dollar and going long assets like gold, and really equities too, stocks as well. But the whole thing's going to shift into overdrive very quickly. And
you look at all of these factors: the yield, the dollar, the gold has been showing a lot of relative strength, and you're not seeing any of that in the stocks.
Yeah, Tavi Costa has had some great charts on that. I've actually republished some of his stuff and reposted some of his stuff. And of course, he's come to the conference this year, so I know we're going to get some more great stuff out of him. But yeah, it is amazing. You know, the World Gold Council put out a note just today saying that in August, gold was down 1%. Now that's in a period when, you know, you had the dollar soaring, yields soaring. You had a tremendous bond sell-off worldwide that sent yields rocketing. And just from an emotional level, you would have thought that gold was down at least $50 over the month of August. You know, it was down 1%. And, you know, well, actually 1%.
Well, and year over year, gold bottomed around this time last year, had a triple bottom around $1,620.
Mm-hmm.
And it's done pretty good over this last year.
Yeah, it really has. And it's just in a holding pattern, I think, right now. And there's no one willing in this environment with the peaking of the hiking cycle, basically here. There's no one willing to really, you know, sell it and short it. I mean, you see the speculators have abandoned the market in the paper gold market to a great extent, but I don't think there's a lot of people out there that are willing to really short gold because anything can set it off. And I think there's smart money out there that's starting to position itself in there. There's enough buying pressure to keep prices elevated. You know, in any investment market, it's not really the selling that drives it, it's the lack of buying. And if there's not buying in a market, it's going to go straight down. And there is buying at these levels, consistent, strong buying that views gold right now as a bargain. And I'm impressed with that. And I think once we get that uptrend established and we know it's coming for one reason or another, then you know, it's going to really accelerate to the upside.
Well, Brien, one of the reasons that I really wanted to bring you on today as well, and thank you for being gracious to come on, is that I try to produce a lot of content to help investors to understand from exploration through to development companies and sometimes even mining companies.
Yeah.
You do a great job with that in your newsletter, but you also have this exciting New Orleans investment conference coming up in early November 1st to the 4th. Let's talk about your conference. You got a lot of great speakers and a lot of great companies there.
Yeah, you know, I think it's the best lineup of experts in New Orleans conference history. And by extension, to me at least, that means the best in investment event history, because I read everything, I watch everything. I've done this for decades and decades, and I know who's really good out there, who really presents sound, cogent arguments, some of which I don't agree with, but I have to recognize, you know, they are very good arguments. And I've gotten just about every one of those top experts here. There may be one or two that I was not able to get. But other than that, they are all coming to New Orleans. You know, if I can run down the list, I've got
absolutely.
I've got Danielle DiMartino Booth, I've got George Gammon, I've got Rick Rule, Dominic Frisby, Brent Johnson, Lynn Alden is coming in person this year. She's the top one out there in my opinion. Dave Collum, Peter Bookvar, Jim Stack, Peter Schiff, Jim Orillo, Tabby Costa, James Lavish. I've got you know, all the newsletter writers: Adrian Day, Adam Taggart, Brent Cook, Mark Skousen, Nick Hodge. Who else? I'm looking down.
You got Robert Friedland and
I don't have Robert this year. That's Rick's job to get Robert.
Oh, okay.
I have had Robert in the past.
But
it goes on and on with a lot of newsletter writers. And I've also got, you know, we always focus a bit on geopolitics and macroeconomics. I've got Matt Taibbi, who I think is the most important journalist out there today, exposing government censorship efforts and assaults on free speech. And in a like vein, I've got Konstantin Kizin, who a lot of people don't know, but I encourage them to go to Twitter or to go Google Konstantin Kisin, Kisin, and you'll see immediately why I've got him speaking. I think he's one of the more brilliant commentators on the political scene today out there. So it's really going to be a huge amount of fun this year.
As you can imagine from my name of my publication shows, is it's the Rocks and Stocks News, and I spend a lot of my time with rocks and stocks and news about those companies.
Yeah.
And there's some of your sponsors here that stick out. Do you mind if I mention a few?
Oh, please do.
One of them being the Discovery Group. This company has a lot of good stories. In fact, one of your top picks, I believe, was Great Bear Resources that was part of that Discovery Group.
Yeah, I love the Discovery Group. They discover things, you know.
Yeah.
We have experiences. They make lots of money for our readers. Yeah, we were behind Great Bear, one of the first behind Great Bear. The only person that beat me on Great Bear was Gwen Preston, and it was by a matter of hours. We were both typing furiously, and she typed more quickly than I did. So she beat me by a little bit of time. So I have to acknowledge that. But we were in there from the beginning to the end. And, you know, I had people tell me to sell, and people who thought they knew better. And I had, you know, talked to Chris Taylor from the very beginning and quite often, and I had a good idea of what they were finding. And so
I have some inside baseball for you on that deal. Yeah. I was actually a consultant for Great Bear for a while.
Oh, really?
And I'm the guy who got Bob Singh to come to the company. Bob and I had worked together for a large geological consulting company for many years. And I knew Bob as just one of the smartest exploration guys I knew. And I knew how well he knew Perry English. And I pitched him on the idea of getting involved because I thought the company would be well suited to look through Perry English's portfolio of assets with Bob. And because of their relationship, get involved in Red Lake, Ontario. And Bob is a brilliant guy when it comes to exploration, and the company did very well following his lead.
Yeah, it really did. And Chris will give Bob, you know, as Chris is wont to do, the lion's share of the credit for all of that. But Chris is a great front person for the company, and also a brilliant mind as well.
And he's very good at presenting stories, and you know, he rolled the dice in a big way, you know, mortgaging his house to pay for that acquisition. So they were a pretty dynamic duo.
Yeah, that they were. And you know, I had brokers tell me that, you know, our geologists don't think the hinge zone hangs together. And I said, well, you know, what about the LP fault? And he said, what's that? And I said, well, have you talked to management about it? What do they say? And they said, well, we haven't talked to management. And by this point, I had maybe a dozen conversations with Chris, and I said, no, that's okay. You know, I'll stick with it.
There's something for all the viewers that are investors in this business that you know, do the things that Brian's talking about. You know, talk to these companies. It's the New Orleans conference is a great place to do that, but the telephone works as well.
Yeah, and that tells you a good company too, if they take your call and talk to you. But the key, Allan, is that what I tell people is this is a very inefficient market. Every day, all day long, there are gems that are just being left sitting on the ground that you can pick up if you're willing to do the work. If you're willing to, you know, pay the money to subscribe to a few of the best newsletters, if you're willing to go to the conferences, if you're willing to do the research online
and watch the Rocks and Stocks news shows.
Well, there you go. That's exactly right. And people are actually doing it right, who are good faith educators in the market. And there's some bad faith ones out there too. So, you know, you have to.
My whole reason for starting, I was a consultant to a lot of companies, and my whole reason for starting the newsletter was I just didn't think, first I thought there was going to be a wave of new investors coming into the business.
Yeah.
And I didn't think that there was enough commentary out there that they would benefit from the education that I was handed from great geologists, great geophysicists, great geochemists. I worked with some of the best. I've talked to a lot of the best on my shows, and I really wanted to be able to pass that on. And that's what I do with my shows.
Yeah, and that's a great way to do it. And you know, if you go, they spend the money, and it's going to take some effort. And I tell people, if you're not going to expend that effort, then buy the GDX and the GDXJ, and you're going to, in a bull market, you're going to multiply your money 3 or 4 times over. But you can do a whole lot better in the kind of market that we had from 2000 to 2011, for example.
Absolutely.
You know, you can have really life-changing returns. And that's going to happen again, and it happens all the time. But you have to spend the money for the conferences, spend the money for the newsletters, spend the time doing the research, and you can do that. It is in an inefficient market, and you can outwork other people and have your own discovery story. Every exhibit hall for every one of these conferences is like, you know, a prospector going out.
Yep.
You can find those stories if you
and you get to prospect the prospectors that are out there doing the work for you.
It's leverage. Yeah, it's leverage.
One of those
spend some time at the bar and going out to dinner with some of these companies. That's where you get a lot of education.
Aztec Minerals is another one sponsoring your show, and they've got this CRD project that I got my eye on very closely. I like that story as well.
Yeah, I do too. And when you consider that to get to that CRD target, they're going to have to go through about 1 million ounces of good grade gold that was left behind. It's not bad, you know. It is one that's primed, in the Cervantes project in Mexico. It's another feather in their cap. But yeah, I think that's a great project, and you know, it was a past producer, and their biggest problem in their drill program is drilling through voids where previous miners were pulling out the gold. You know, that has been one of their big problems, but they're getting below the water table, and then that CRD, you know, that's a great cherry on top.
I pay attention to that because I was fortunate enough to talk about Arizona mining there before they had their big CRD discovery.
Yeah,
well, they were about 50 cents and nobody was paying attention. John Kaiser and I talked about them on a bunch of shows, and now recently I-80 Gold, run by one, they're a sponsor of my shows, but I've been a long fan of Ewan Downey, and he's got this phenomenal CRD with an overprint of high-grade gold in it as well. So I'm a big fan of CRD systems, and I like what Aztec has.
Well, you can be a fan of the system, but you know, you have to be a fan of the management team there and their goal. You know, and that is going to be his swan song in the industry, and he wants to go out on a high note. And it's just working beautifully. The logistics,
everything,
the foresight to see gold where, you know, it's high grade gold where it's being overlooked, the capability to put the assets together, the respect he has in the market to put the assets together, and then good fortune, you know. Good fortune to hit some surprises along the way where you're getting different mineralized systems than you expected to see. It's
crazy, you know, to have Carlin sitting right beside a CRD, sitting right beside a skarn, and now on the other side of the fault, they've got this sulfide system, and they're all like packed right together. There's some big powerful system sitting underneath there, and a lot of high grade material. I think I-80 Gold is a cornerstone holding for investors that.
I agree, and I think there's going to be some other place in that area too, is a consolidation, and I-80 will be the consolidator.
Fortunately, Paycor was also a sponsor, and they were one of the consolidated. And two other stories I'm following there right now are Golden Lake and North Peak.
Yeah.
As well as Timberline.
Yeah, I'm looking at that area as well, and have at least one of those companies on my short list for a recommendation.
One of them is going to be at your conference.
Yeah, well, that's a place to go. All of next year's big discoveries are going to be at my conference, Allan.
Okay, let me scroll down here and see a couple more names that popped out of my P2 Gold. Those are the guys from Pretium. Pretium was a great pick for my reports. I started covering it at about $3. They ended up getting bought out for $19. And the geologist and the guy that helped put all the funding together are now have P2 Gold. They're going to be at your.
Well, I will go even further back than that. They are the guys behind Silver Standard.
Exactly.
SR mining, and we rejuvenated Silver Standard in the early 90s in Jim Blanchard's office with Rick Rule. And Jim wanted a pure silver play. And Rick said, I found just the company. And he bargained with Tech. And Tech didn't know what hit him, but Rick really bargained with them and got the control of the company. And we started, well, they started Silver Standard, and we were backing it for many years. And that company just, went from whatever it was, 25 cents to over $20, and just made a ton of money for everybody.
Yeah, well, I like to hang around with guys like the Pretium guys, the Silver Standard guys, and when you got the brains that sort of did a lot of the work to make the discoveries and build the mines, that's a heck of a team to have at a little company like P2 Gold.
Absolutely.
Another one that there's some more here that popped out. Let me just scroll down a little bit. Oh, Aston Bay. They've got a pretty exciting situation going on right now at their Storm property, where they have a 20% interest carried through to production. And I think they're onto an elephant, Brien.
Yeah, they have been working at that for a while, and it got pretty frustrating for shareholders and management and everybody who was following them. And Eric Coffin has been following them very closely and is kind of the guy for that play. But it's when good people keep doing good work, you take an industry where the odds are really stacked high against you, and you're just cutting those odds down and de-risking. And when you see good people doing good work and finding good projects, that's what you want to go for, and have the patience to let it work out. And they're proving the model now.
Actually, a lot of people talk about the odds in this business, Brien, but in reality, my filter is pretty solid based on, my experience with geologists, geophysicists, and geochemists. And if you focus on the ones that have those boxes ticked off, there's not that many. And Aston Bay is proving why you do that, because they're what I call a phoenix rising from the ashes stock. And now it looks like they got their hands on an elephant there of copper, which we need more copper stories out there.
Yeah, I'm a huge bull on copper. I think the copper price at the start will double over the next 5 years or so. And if you talk to Craig Perry, he's going to say it's going to go up 5 times, but or something like that.
Well, you look at, about 15 years ago, I read a report that stated that we needed to find this was just based on the needs for the emerging economies. Electric vehicles hadn't come along yet. And they were talking about needing an Escondida every year just to meet the demands of the developing economies. Yeah. Now you throw on the electric vehicles, and all of the mines are aging to ancient, and there's not enough in the pipeline to meet the demand. So some of these numbers, 3 to 5 times, it wouldn't shock me.
No, that you're exactly right. The baseline demand for copper means that we're going to be in a significant supply deficit forever going forward, now going forward. If the EV issue, which is not just electric vehicles, but it's also the whole grid, the distribution system, everything has to be redone. Then you add that on top of it, and copper is facing what may be the steepest demand curve in the history of commodities, and it can't. There's just
in a totally unprepared supply chain. Totally unprepared.
I saw one analyst say that out of all of the major deposits out there, there's lots of 500 million ton or larger deposits out there that have not been developed for one reason or another. Low grades, too low, capex, politics, etc.
They all got to work.
They all, you say, well, let's go find which ones are going to be developed. They're all have to be developed. It's a matter of which ones are going to be the first and get the most money for them, because to meet this demand, they all have to be developed.
Absolutely.
And of course, there are ones that will never be developed, Pebble perhaps, which could actually make a dent.
Especially for America.
Yeah, exactly.
Some others BlackRock Silver. They're drilling something that not a lot of people are paying attention to, but they should, because that Silver Cloud project that they have, it's in close proximity to Midas, which was a high-grade epithermal vein that made a lot of money. And over on the other side is the Hollister. And they found an epithermal vein. And for my viewers out there, the key milestone in an epithermal vein discovery is finding the boiling zone of an epithermal vein. And they came back with 70 grams of gold and 600 grams of silver. That tells you that they're in the boiling zone. Now they're expanding that boiling zone. And often when you expand on these things, because these epithermal veins come in clusters, sometimes when you're expanding, you accidentally find more. And that's the situation with BlackRock Silver, and they're not getting a lot of love for it.
No, they're not, because Silver Cloud was, I'm not sure if it was their qualifying transaction, but it was definitely the redheaded stepchild in their portfolio.
Well, it was the star for a while. Then it became the redheaded stepchild.
Yeah, Tonopah was the big play for them, and then there was a little interest in their lithium, which I think still is an interesting play. They joint ventured that out, the lithium potential. But yeah, Silver Cloud's coming right back, and I would not be surprised if it surpassed Tonopah in their portfolio.
That's an interesting analysis, because at Tonopah, one of my favorite mining companies right now is Silvercrest. And the reason that I like Silvercrest so much is that they've got very low cost. They're producing silver at about $12 an ounce, selling it for over $20. Yeah. In their first quarter of full commercial production, they've already paid back all their capex to build the mine, while also building up free cash flow.
Plus the $80 million line of credit as well.
Exactly. And while doing that, that's what happens when you find a cluster of these epithermal veins. And that's what they have at Tonopah. And when they did their maiden resource estimate, it is almost identical to the Las Chispas Silvercrest. So they've got 2, maybe 3 barrels of a gun there pointing in the right direction.
That's a good point. And of course, Silvercrest got the snot knocked out of it because the expectations weren't managed, and they had some nasty surprises. But it's still. I
don't think it was so much. What happened is, and this is what investors have to be careful of, when you do an economic a feasibility study, you're estimating what you could see in the future. Now, you can't calculate all the variables, but when you start mining it, then all the variables are taken out.
Yeah.
You see the actual. And yes, in the feasibility study, they talked about $8 an ounce per ton of silver production. They still can't, they're still coming in at $12, and it's a free cash flow machine.
Yeah.
So, you know, and maybe you overestimated your resource, but they got plenty of room to grow that resource. I think that the recent smackdown was way overdone.
Yeah, and that's what happens in these markets. That's where the opportunities come in. And you know, I have our gold newsletter portfolio in here, and it frankly, I'm trying to winnow it down. And so I'll look at opportunities like that, and I'm like, God, I'd love to add it in the portfolio, but what am I going to kick out? Because it's such a, you know, target-rich environment right now.
Absolutely.
It really is. And if you want to be represented in copper, in lithium, in base metals, in energy metals, in gold, in silver, in uranium, you know, pretty soon it starts to get mind-boggling, you know, how you can have a foot in every room.
Yeah.
But it is that it's better to have that kind of a market though than
when you're buying, for sure.
Yeah.
Brien, how is your time doing? I still got a bunch more I'd like to talk about, but I want to be respectful of your time as well.
I believe I am fine right now, Allan.
Okay. Well, let me keep running through here, because exploits discovery, you talked about target rich. They're right beside newfound gold. And what's interesting is there's the Bonanza discovery, and there's I forget the name of the other one, Jackpot or something like that. And those things are going right towards where exploits has hit very good grades on their side of the fence, the claim block. That's one I'm also following very closely. In fact, I did an interview with their geologist, their exploration guy, talking about a month ago.
Yeah, I think the exploits target is called Bullseye, and
Yes.
it's exactly as you say. They've gotten kind of, I believe, very similar grades to Newfound's discoveries, but perhaps not the length of the intersections yet.
But they're only scratching the surface, Brien.
Right.
And in these orogenic gold systems, they are fault controlled. So these are big cracks in the earth, and then there's a bunch of secondary cracks in the earth. And you have to understand those cracks. And when you get that kind of grade on the top of the system, it points towards some juicy stuff at depth.
Yeah, and a great aspect of that story is they will never develop what they find. And the company that will develop what they find is the company that buys Newfound. And so, but long before that, they will be bought out by Newfound. And that will happen. And the question is not that it will happen in my mind. I know nothing of, as far as I know, there have been no discussions or anything along those lines. It just seems obvious that will happen. And that the question at this point is, how much value can you create to get as high a price as possible? It's not that you're not going to come out of this a winner, but how much of a winner will you eventually be? Well,
often when you start from the phoenix in the ashes stage, and you make discoveries, and you still get to buy it at the phoenix in the ashes stage, you know, they're coming from a low base.
Right.
Heliostar, interesting. I've known that their assets in Alaska, because I used to work for Red Star Gold, and Red Star was the one who put the package together. Scott Weeks, who's sadly no longer with us, I still remember him calling me and telling me the details. He says, "What do you think the market will think of this?" And then he talked about all the aspects of Unga in Alaska. I said, "I think it's a winner. Let's get it." And he subsequently put it all together. But Heliostar has worked that project. And now they're focusing in on Mexico, where Charles Funk has had a lot of success. And they got what I think looks like a future cash-making machine of a mine.
Yeah, the thing with Red Star and that whole project was I always found it, the Alaska project, I always found it difficult to visualize how it all hung together. Part of the reason was because it extended over a number of islands and there was water in between what could have been trends. But, I recommended Helixstar back then because I had great respect for Charles. And also they had 400,000 ounces at 10 grams per ton at the Unga deposit. And, you didn't have much of a hurdle left to make that work. And in fact, even that deposit at some point could be a standalone deposit. But he came across the project in Mexico, in the Ana Paula project,
Ana Paula, yeah.
And the high grade, and the previous owners had, I forget what the size was in terms of ounces, but they kept trying to overanalyze it because they were only going to get a 70% recovery rate.
And wanted to make it a open pit.
Yeah, and they wanted to take everything, the low grade and the high grade, and maximize the amount of ounces produced, like there was some, public obligation to produce as much gold as you could produce. And Charles had, and of course he went into tough markets, et cetera. And Charles looked at it and said, well, you've got a high grade core that's 5 grams per ton plus average. And why don't you just scoop that out and accept a 70% recovery rate, and have that 30% penalty? It's worth it. The project with much lower capex, much lower permitting hurdle, everything would make the same amount of money in the end.
That's kind of a strategic microcosm of the business right now, I think, Brian, is that everybody has always looked for size. And now I think it might come down to more selective mining for profit.
Yeah, it can and it will. And if you look at that deposit, even at 5 grams and above, and it's still a large deposit. And the mining industry is preconditioned not to kill a mine by not high grading it, because by not high grading, you extend the life of a mine, and therefore you extend the lifetime of the jobs in the mining industry. So from an economic standpoint,
while also diluting your profit.
Yeah, but that, as long as you still have a job, it doesn't matter. So the industry, especially that kind of, was predominant in the South African mining industry. Like, don't high grade a mine during slow times because you'll kill the mine and all our jobs will go away.
Right.
But from an investor standpoint, that's not always the end goal.
Right.
But what Charles is finding in that high grade panel, and they just released results, I believe, today, that are again extending that high grade panel with really great, stunning results, and adding considerably to the ounces, not just ounces, but high grade, easily mined, highly profitable ounces. Plus, they're doing some metallurgical work. So the bottom line is their whole idea worked. And if nothing got better, if they went in at their conservative estimates of what the previous operators said was there in terms of high grade, and figured that they're never going to be able to improve on metallurgy, the economics still sung. But now they're going in and expanding the high grade, finding bonuses, and improving the economics, hopefully on the metallurgical end. So yeah, I love that story. And again, you got to love management.
Yeah, Charles is a smart guy. Tectonic Metals is an interesting one that will be at your show as well. They're looking for one of those tombstone type deposits like what Snowline has found, and they've got a good management team as well.
Great management team. They have an extraordinary project, which a lot of people don't know is they've got 1 or 2 behind that one, and they can only, as a small company, they can only do so much at one time. If and when this market gets going again, and they can really finance that at non-dilutive ways. I'm gonna jump all over that company, because the projects that you don't know about in that company would be company makers in and of themselves.
Well, I've got a couple names that I don't know if you follow, but there are a couple names that I follow very closely. One of them I want to mention to you because I did an interview with a guy named Jim Rogers not too long ago. And I am promoting everybody to go check this out because he's an exceptionally talented exploration geologist. He worked for Gold Corp in the Red Lake mines for many years as the exploration manager, and at Eskay Creek. This guy's very talented. And what I often find with talented people, Brien, is that they are able to talk about a project in a way that anybody can understand, whether you're a geologist or you're an investor. And he's now joined the team at a company called Dynasty Gold. And that's on the back of Rob McEwen recently making a $1.4 million investment in the company. And I did this interview with Jim Rogers about a week ago. If anybody's interested, you can go to my Substack at rocksandstocks.substack.com. And not only does he explain the Dynasty Gold story very well, but it gives you a lot of insights into how investors should look at exploration as well. And then today they came out with some very high grade results, and yet still have a $17 million valuation and only 61 million shares out.
Yeah, Alan, it's interesting that you should mention that, because I saw those results this morning and I kind of mentally put it on my list that I really need to look at that. And I hadn't, and they're only up 3.7%, nice volume today, but only up a penny.
Yeah.
Yeah, $17 million market
Well,
cap.
if you want to get the inside scoop from the guy who's doing the exploration, that interview I did with Jim Rogers, you follow me on Twitter, you can find it in my profile on Twitter. I just think if you want to understand Dynasty, or you want to understand how to look at exploration, that's a must-see TV.
Oh, wonderful. I'll definitely check that out, because it's a company. I mean, this is what I do. It's kind of my reason for getting up every day, is finding new opportunities for our readers and conference attendees. So
another one that I don't know if you follow, well, I do. Here's one you do follow, I think, is High Gold, run by Darwin Green. Now, Darwin, myself, and Bob Singh have a history together because we all work for the same geological consulting firm. Darwin went off to work with Constantine and then spun off to High Gold. I became a newsletter guy, and Bob Singh became famous with Great Bear. But I have a lot of great things to say about Darwin. Darwin is a top-notch exploration guy, and they just had excellent news out today from their Ellis target, which has my attention in a big way.
yeah, and the Johnson Tract project is incredible in its own right. And they had to spin out some of their assets into
Onyx.
So yeah, so they've really got it going. I've gotten to know Darwin over the last year and a half or so, and looked at it for a while before I finally pulled the trigger on a recommendation. And you cannot, grade makes all the difference, as you know. And you get those kinds of grades in that kind of an environment, where infrastructure is about as good as it gets in Alaska. Then it's
just not a lot of 1 million.
A lot of other mistakes.
There's just not a lot of 1 million ounce, 9.5 gram stories out there. And I actually have done a lot of homework on that Johnson Tract project, that deposit. And I don't think anybody really realizes that. I think that's a 2 to 5 million ounce target. they've been sort of focused up at the top of the system, but it actually looks like it could be like a bell that gets bigger as you go deeper and has that element of higher grades as you go deeper. They've already got 1 million ounces. I think it could be a 2 to 5 million ounce target.
Yeah, and of course it's not fairly valued even on what they have. So
let alone Ellis. You're getting Ellis for free.
right.
I don't know if you follow Goliath, but there's another one that I think has got 5 million ounce plus potential.
Yeah.
And they keep hitting visible gold and high grades, and they're understand. They got a great team of geologists that done some interviews with them. These guys are top notch. I like to find these guys before they become household names.
Yeah.
And I think that team at Goliath is going to become a household names like Bob Singh in the future.
Yeah, I like the story. I like the potential. For me, it comes down to you just can't have everything in the portfolio, But I have nothing but good things to say about that target and how it could grow. I mean, multi-million ounce target.
Absolutely, and they've got these fault system that I think that they're going to find the heat engine of the whole thing. And if they do, it should be very high grade, because what they've got as you get away from the heat engine is quite spectacular. They've hit a lot of 6-meter intersections of over 6 grams per ton of gold. And now they're transitioning to, on a consistent basis, hitting visible gold. So I really like that story a lot as well.
Yeah. I can see that.
Brien, you've been really generous with your time. I started by saying this interview was too long overdue. I'm really glad you came on, and I think we had a great chat, talked about some names, talked about your conference, and I think you do what I do. I do online what I think you're doing with your show. You're giving investors an opportunity to do the homework.
Yeah.
Go and shake hands with these people, look in their eyes, talk to them, and that's a great way to find undervalued people in undervalued situations. Yeah,
and in general, that's the thing to do. But when you're in a market like we are now, I think it is almost a generational. Hell, I think it is a generational opportunity. With metals prices where they are, when you have the dynamics from base to energy metals to uranium to gold and silver, all having their individual drivers, but all coming together in an environment that argues for much higher prices. And the mining stocks are as undervalued as they have ever been in history. And all it will take is just a small spark to set everything afire. I think this is the opportunity that people really need to seize on. And
life-changing.
Don't sit on your hands, whatever you do.
Make sure you got some of those good stories of people that are going to be at the New Orleans mining investment conference and on my Rocks and Stocks news shows. But Brien, thank you very much for coming on.
Thank you, Allan, for the opportunity. And I urge all the listeners to go to neworleansconference.com, and you can see everything you need to know about this year's event.
Awesome. I'm going to close it off and we can have a little chat at the end there, Brien.
Great. Thanks, Allan.
So there you go, folks. I think we talked about a lot of good names. We talked about the sector. We talked about the big picture. And, ultimately, I'm all about being an impetus for you to do your homework. This is a sort of a chance for you to get some views and things, but do that homework, because when you do, I think you will make more sound investment decisions and not those emotional ones based on fluctuations in stock prices. And those are the people that over my career I've seen do the best in this industry. And so check out Brien's conference. If you're going to be in New Orleans in early November, you can enjoy some fantastic food in New Orleans, and learn about some good companies and listen to some top commentators. On that note, have a great day and we'll talk to you soon.